Welcome back to the second half of the Future Show. Traders were now less than 60 minutes away from the open here on Wall Street. We just had some closely watched economic data, so let's head on over to the floor of the CME Group where we have Scott Bauer. He's the CEO of Prosper Trading Academy, standing by to talk numbers. Let's take a look first at those numbers here, where new claims came in at 203,000. That's 15,000 below the estimated 218,000. Again, I mentioned Scott standing by to take a look at those numbers. Scott, welcome to the show. We appreciate you taking the time to be here with us this morning. Let's talk about that number. I'm curious how much attention it's really going to get, considering that the jobs data is tomorrow, the non-farm payrolls, the bigger the monthly look at the labor market.
It was a number, Ben, but now it's behind us, and everyone's forgotten about it. Quite frankly, it's been, 45 seconds. That number is behind us because it wasn't a big outlier. It was lower than expected, like you said, but that's really it. And it didn't really affect the overall market. You know, we've seen futures this morning moderately higher, a little bit of a continuation from yesterday, but a lot of pressure on bonds right now, or on yields. We saw a big spike up a couple days ago. We're seeing a continued now fall as bond prices are getting bid up this morning.
Yeah, but for the most part, Scott, as you mentioned, kind of a muted reaction, and we're seeing that in anticipation of the jobs data tomorrow. It seems like that's the big focal point this week, aside from U.S.-China trade, which seems to be kind of on again, off again. I mean, the anticipation, the buildup is on the monthly number, correct?
Absolutely, no question about it. And even the number tomorrow, Ben, unless it is a major outlier, probably is not going to affect the market that much.
Okay.
You know, the focus really, at least in my book, is more on the manufacturing sector, the ISM numbers, the PMI, which have been weak, and so, you know, showed some chinks in the armor maybe for the economy here. So unless we get a big outlier tomorrow, I think this market is squarely focused on China and what happens over the next couple weeks. Are we going to get some sort of repeat of what happened last year, which I don't think we are going to.
Yeah, there's a lot of fear associated with the fourth quarter of 2018, that's for sure. Let's shift the attention here from some of the eco data on over to one thing that a lot of people are focused on this morning, OPEC. It appears to be, they, I should say, appear to be stuck between Iraq and the United States. They cut to support prices, Scott, but then shale producers just gain more of the market share.
Right, they're absolutely fearful of the U.S. being the number one, exporter now in the world, and the continuing ramp up of shale production here. So, the word on the street, the early word coming out of these meetings is that they're going to look for as high as another 400,000 barrel per day cutback, either to June or maybe for all of 2020. That's a 33% increase from where they are right now on their extended cuts. Right now their cuts are 1.2 million barrels per day. So we haven't heard any official word yet, but that's what the market is kind of assuming.
So from a technical perspective, I mean, we've got crude at a key level right now, holding right on the highs from November, headed into this meeting, Scott. But if you take a look, you're going to see that they're also holding up above some key support here around the $50 level. I guess, where does the downside risk lie here, potentially that they don't cut or push back cuts further on into the year?
Well, absolutely. If they don't cut at all, we're going to see sub 55 here maybe in the next day if they don't cut, because the market expectation is for a big cut here. I think, we talk about the buy the rumor, sell the news type of event that we see often, and this may be one of those. So once they actually announce what this cutback is, I don't think crude is going to rally. I think the market is already pricing that in.
Yeah, definitely seen some higher lows and higher highs off the levels that we saw down around that $51 level. I think it was back in October. Let's talk inventory, Scott. This week we saw some draws. I guess some of those demand concerns are diminishing, or maybe it is still too early to establish a trend at this point.
I think it's too early. We see so many fluctuations in the EIA data, and yesterday we saw, a bigger drawdown for crude, but when you looked at gasoline and distillates, there was actually a bigger build. So, the market, I think, digested that and didn't trade much off of that. We didn't see much movement in crude overnight. It was initially down. Now it's back up a little bit. I think squarely the focus is on what is going to happen with these OPEC meetings.
Yeah, I'm glad you brought gasoline into the focus, because I was going to ask you about that, Scott. Gasoline seems to be telling us, well, a little bit of a different story in terms of what crude's been telling us. We have the RBOB, the gasoline futures contract, which seems to have rolled over the last few days, possibly in reaction to the larger than expected inventories, as you just mentioned, in the distillates and in some some of the gasoline products, but talk to me about the divergence between these two products. I mean, obviously a lot of optimism associated with the potential for OPEC cuts, but if you take a look at RBOB, again, holding below the 170 level.
Absolutely. Like you said, it kind of rolled over,
Yeah.
and very much a surprise, actually. You know, maybe it's because we're past the holiday, you know, the big Thanksgiving drive weekend, and it also could be because of the big weather impact that we had. You know, the nasty weather we had last week may have held back. I haven't seen the numbers yet. May have held back a lot of people from driving over the holidays. Who knows? But yeah, it has rolled over, and there is right now a big divergence between crude and what we're seeing with the gasoline inventory.
Yeah, you bring up a good point there, Scott. I was reading about how that weather actually impacted airlines and some of the driving, as you mentioned, but airlines ultimately removing some of their demand as well amidst some of those groundings. But let's talk about natural gas. For the most part, a lot like some of the other products we've been talking about, some intraday volatility, but yet limited in terms of real directional conviction one way or the other, still holding up above key levels again. And well, for the most part, as you can see here, we're showing the chart right now, range bound, slightly higher this morning. Scott, at 253, up on the day by about 1 1/3. What have you been seeing in the NG?
Yeah, just like you say, we're seeing that intraday volatility, but overall, completely range-bound. You know, Oliver Rennick likes to call this product the Widowmaker, and it really has been for quite a while. We saw that big bump up, what was it, about 4 weeks ago or so when Natty Gas got up to about 280 when we got that initial blast of winter weather. I think, what was it, mid-November or early November, maybe late October, but it couldn't sustain that at all. And natural gas is one of those products that is really a momentum type of trade. When it gets rolling one direction or the other, it's hard to get out of its way. But however, it got up to that 280 level and it just stopped on a dime. And now we're hovering right in the middle of that range that you've talked about. Really 220 to 225 on the low end, that 280 on the high end here. So, you know, I was just reading some interesting articles about if you're waiting for the winter weather forecast to affect natural gas, and if you want to trade off of that, it's almost like trying to trade off of the U.S.-China tariff talks, that it's so headline-driven, and you have to be very careful in that space if you're going to make a trade-off based off of that.
Yeah, definitely. We see kind of unusual reactions, to say the least. I often call them random type reactions to some of the data, some of the expectations there. Certainly seeing a nice move, as you mentioned, from 280, 289 all the way down to 227. Scott, really appreciate you joining us to take a look at energies ahead of the big OPEC meeting and to help us break down some of those 730 numbers. Traders, that's Scott Bauer, the CEO of Prosper Trading Academy.